Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone, how you going? Welcome to the podcast. I hope you're enjoying what is one of the many shows now on the Smart Property Investment Podcast Network. We really do enjoy delivering this product to you right across the nation, wherever you listen to it. There's a whole bunch of podcast players now accessible to make listening to the podcast so much easier. It's good fun. You've probably heard some of my colleagues on the podcast recently who are joining me, just giving their musings and their attitudes and aptitudes towards investing in property on the front line, writing stuff every single day. We'll keep at it. If you're not yet checking out smartpropertyinvestment.com.au, so the first to know what's happening, property investment right across Australia, smartpropertyinvestment.com.au or /subscribe, and you can make sure you get every single newsletter we send out every morning. Today, we're going to have a chat around a whole bunch of different issues around property prices, which seem to be going north quickly, which is great if you're a current investor and maybe not so great if you're going to auctions all over Australia, particularly Sydney and Melbourne every single weekend. We're going to touch on the coronavirus, the interest rate cut. So only a number of days ago, the RBA jumped in again and cut rates, some of that connected with the coronavirus, supply and demand issues, first home buyers, finance, and some of the consumer sentiments towards property right now. So we're going to cover all that stuff off. And as I've probably mentioned beforehand, I'm just a journalist here trying to have a bit of a chat with some people who know a lot more about this sort of stuff than me. And one of them is in the studio with me today, Glenn Moose. The Moose.
There's a moose loose about the hoose.
Glenn Goose McGrath is one of our regular guests. He's back in the studio. We're going to have a chat about all this stuff. Goose, how you going?
Well,
Is that a slip of the tongue, Moose or Goose?
It's so funny. I get all kinds of things. Moose it's not the first time I've gotten Moose. But my name is Goose, and I am actually delighted to be here. And coming on the show and chatting with you, Phil, is actually one of my favorite things to do. It really gets me excited and gets me motivated and allows me to, excite other people as well.
You know, I'm quite weird with nicknames, right? Like off podcasts, like I'm big on nicknames. I'm the originator of most people I know's nicknames over many, many years, and I'm one of those sort of guys, right? But I always struggle on a podcast to use people's, and we've had this chat before, to use people's nicknames, like Glenn Goose McGrath.
But let me tell you. So I obviously get on the phone quite a lot. I'm always calling real estate agents or this and that and the other, building networks, building relationships. I mean, it's what we do. Every single time that I call someone for the first time, maybe a new real estate agent or whatever, I say, hi, my name's Goose. And I always get the, sorry, what? Oh, yeah, it's Goose. And then they'll crack up laughing. And what it does, and I think it's fantastic, you can hear them start smiling on the other end of the phone. And
well, I'm smiling now.
Yeah,
right?
You're smiling right now. And my personal belief is, whilst I have copped, a little bit of like, well, that's not very professional for a real estate person, is it? To the same degree, if I can inspire someone to smile for 5 minutes in their day and to just take life a little bit lighter, then I think I'm doing a good job and I'll be happy with it.
You know what? And, I cover a lot of ground in real estate. I meet a lot of different people, right? Like you're a particular type of person. And that's a positive thing. But I meet a lot of people who are not like you, and I know it's like we've spoken about it before the last time we got together, this sort of philosophy of how you see the world and why you do what you do and why you've changed what you've done in the past to do what you do today. And it's really important for you to make people happier, better, more connected with, creating a better themselves, right?
Yep.
That's a big part of your why.
Yep, massively. Correct.
And how do you keep connected every day? Is it like just is?
Look, I think it comes down to a deep-seated belief structure that I've got and how I want to be in the world and what I want to get out of the world. I think a lot of people have got different motivations and different drives, and what I'm most deeply passionate and committed to in my life and the thing that gives me the greatest levels of fulfillment and joy and purpose is helping other people succeed and helping other people to move past their own limiting beliefs and to overcome their own problems. It doesn't have to be with real estate. I help people do that. But, just helping people to problem solve the roadblocks they may have in their own life in some way so that they can progress and move to a life of greater abundance in some way.
You make my job easy.
Because I talk a lot.
Yeah. I normally struggle trying to string a couple of words together myself, right? So to bring someone like you in to have a chat with it. But, make my job easy as a podcast host in that when it comes to property investment, a lot of people get caught up in the tactics of how to do it versus the why they're doing it, right? And for you, you're a lot more connected with the why, and then you let the tactics dictate the why, as in the strategy, and that's a good thing. That's a good way to see property.
Absolutely. And I'm really actually glad that you brought that up specifically because tactics are one of those things. It really doesn't matter whether you're talking about property, business, look, literally anything. Tactics are something that can and should change and be malleable to the outcomes based on the situation that you're in at that current point in time. Tactics must change. And this is why, everything for me is really rooted in principles and belief structures. Because I think if you can root everything in principles as opposed to tactics, you're more malleable to finding success in whatever that is. And it could be business, it could be real estate, it could be painting a picture, it could be anything. So if you focus on the tactics too much, you're probably, anytime the situation or environment changes, you're probably going to struggle. So an example in property, the tactic might be, I don't know, it could be renovating for profit, or the tactic could be property options, or the tactic could be vendor finance, or the tactic could be building duplexes. There's all these different tactics that you can deploy. However, I think that currently at the moment, what we're seeing in the marketplace, and it's a good opportunity for us to probably start venturing into that kind of discussion, what we're seeing in the marketplace at the moment, particularly in the last since really January 1st, we've seen a massive market shift in terms of sentiment, activity, opportunity, choice, environment, changes, all of this kind of stuff, which is where I think that people need to really address the tactics that they're following and wind that back. You've got to have your purpose, your values, your principles. We kind of covered that in the last podcast where we talked about mindset versus mechanics. I really want to position people to consider their psychology in the marketplace, in a changing marketplace, and how they are rooting their strategies in principles, not tactics. Strategies are the middle piece. But if you can go back to principles, I think you're going to be able to drive that forward.
And it's a really important point you make because I think, and when people get it, they get it, but sometimes it takes them a little while to get it. The difference between tactics and strategies, it's basic stuff that you need to understand to be an effective property investor.
Yep. Absolutely. And I think there's 3 levels, right? There's tactics, strategy, and principles, or tactics, strategy, and vision, depending on the vector on which you're applying that. So tactics are the thing you do. Strategy is the paradigm in which you are deploying those tactics. And principles are the overarching belief systems, structures, and values which define the outside prism of that strategy. In which case, for us, and the strategy that I've talked about time and time again, or the principles that we really espouse are really simple. It's cash flow positive properties, or in this kind of environment, you could simply say high yielding properties in high growth areas with value add potential. The tactic variation is where you come into it. And that's like, what's the value add potential and why and when? What opportunity am I looking for? Because what we're seeing at the moment is we're seeing a rising market. Really, in a macro sense, we're seeing a rising market. So for example, under market value is a tactic that you can deploy in certain market conditions to achieve optimum results at the day you buy. However, in a rising market, that might not be the opportunity that you need or the tactic that you need to be chasing in order to see the greatest levels of success in your property investing journey. And I think it's important to be malleable to that and then stick with your strategy in line with the principles.
Yeah, really important. Get connected with that. Do some of your own exploration around it because once you really get understanding and appreciation of the differences between these things, be a much better property investor. Now, Goose, I've heard something about you that I need to talk to you about, but before we do, it's going to go to a quick break. Back in a moment. Welcome back, everyone. I'm here with Glenn Goose McGrath from dashdot, Buyers Agents. He's a regular on the show. Now, my people tell me you've got some news, something around a book called Limitless, the Renegade's Guide to Building Wealth Through Property. How come no one knows about this and why am I talking about it on this show? What is so ruthless about and being a renegade around property investment? Like, what's going on?
Well, look, the book only just came out yesterday, and if you're listening to this in the future, which you are, it will have probably be, I don't know, last week or in the last
probably a
couple
bestseller, right?
Yeah, it's probably a bestseller by now. So we've only just released it. It's not for sale on Amazon or anything like that. We're doing a pretty limited offer. We can talk about that in a moment. But the book is really, I guess, a distillation of my journey and my story and my values, and also, rooted in principles about property investing and the paradigms that I see are going to be able to guide anyone to property investing success. But I mean, it's very ruthless. It's very raw. It's undoubtedly going to be extremely polarizing. It will inevitably be controversial because I don't hold anything back. One of my highest single values, if not the highest single value, is integrity and honesty and transparency. So I've literally just thrown myself into that book and said, cool, this is who I am. You don't have to like me, but this is who I am, what I stand for, and what I believe in. Now, the book itself sits almost perfectly on the crossroads of personal development and property, which is a really interesting position to take because a lot of property books out there, and I've read a lot of them, and they're awesome and they're fantastic. There's a lot of good stuff out there, but it's mostly tactics based.
Yeah, it's all tactics.
It's all tactics. So I actually sort of tried to go back and go, okay, cool, let's examine who we are as people. Here are the tactics, tools, and strategies you can deploy to uncover your own purpose and your own potential and understand what your vision and values are going to be moving forward so that you can more accurately, adeptly, and adroitly apply the principles and strategies and paradigms to your property success. So I think it's a very interesting new take.
And therefore it being called Limitless, right? I mean,
absolutely. It's about, it's not about anything but reducing your own limits and reducing your own limitations, limiting beliefs and limiting structures in your own mind and opening yourself up to the ideas. If you root yourself in principles, right? Again, rather than tactics, you can open yourself up to thinking about situations in new and exciting ways where you can triangulate different opportunities and ideas once you can understand how tactics fit in with that. And I think that that's the most important and powerful thing that people can learn.
Limitless, the Renegade's Guide to Building Wealth Through Property. So you're a renegade, and a renegade is someone that just doesn't see the world like other people. Is that pretty much what a renegade
totally.
is?
I mean, if you want to get down to the actual...
The Webster's Dictionary identifies...
it's a defector and a traitor and all of this kind of stuff.
Yeah.
But look, the usage of that word in this sense is really to help people to self-identify with a bit more free thought, something that is probably against the status quo. I'm not going to beat around the bush. I don't appeal to everyone. There are a lot of other people in the industry who I love and respect who don't love and respect me, and that's totally fine. They don't have to. You know, the people who want to align themselves, listen to what I've got to say, who are going to resonate with this kind of podcast, are typically going to be people like entrepreneurs or people that are into change and self-development and growth and all of that kind of stuff. And that's cool. And I think that that is what I really tried to push towards with the book. I think if you try and do anything that's going to appeal to everyone, you're going to appeal to no one. So I tried to just basically go, okay, this is who I am. And if you too are like that, this is for you.
That's an important point. You know, myself, I'm a big advocate of and a beneficiary of leveraging people to help me do what I do better as a property investor. I've spoken about it for years, one of the bases that we do the podcast and stuff. So, you know, my view towards you is largely irrelevant because that would be my view towards you. Everyone gets to make their own decision of who they choose to use as part of their property investment journey, how they can lean on those people. Now, my view towards whether you're selecting an accountant or a buyer's agent or whoever, you've got to get on, you've got to see the world the same way because it's a pretty tight relationship if it's done well. You've got to get it right. Absolutely.
Look, fundamentally, you know, I'll pull back the curtain a little bit here. We started as a business to grow quite quickly last year. And very quickly, I realized that the most important thing to us as a business and the most deep and profound impact that we could have on our clients was about making sure that we were aligned on a values level. Because anyone can go buy property, right? Anyone can go buy property for anyone. However, that's not the kind of, life and existence I want to live. I want to be able to connect and really resonate with people. And I think it's super important because there's trust, there's deep involvement, there's longevity, there's relationships, and you've got to have that connection and you've got to make sure you're connecting with the right people.
So we spoke about it quickly, this whole supply and demand scenario that we're in right now. And I'm talking, and I know I'm going to get some criticisms about this because we always talk about Sydney and Melbourne, right? You know, we touch on Brisbane as well, similar sort of market. But right now, there's a lot of activity. There's a lot of people in the market looking for property, whether it's owner-occupied or for the purpose of investment. We're sort of specifically talking about investment. You look at the auction results through the roof and this sort of stuff. What's your read of it all right now? And I'd like a response in terms of some of the other market forces that can't be controlled right now, i.e. the big C word, right? Coronavirus. What's going to happen? How do you make sense of it all?
Well, I don't want to sound macabre or anything like that. I am so excited by everything that's happening right now because what we are witnessing is this amazing, you know, almost like a big bang level of energy, of explosion of excitement around two fundamental forces, and two forces that I'm so enthralled in daily: economics and human psychology. Okay. So it's very clear that I'm interested in human psychology. We've talked about that kind of stuff a lot.
How much toilet paper have you bought the last couple of days?
You know what? It's so funny.
Talking about human psychology.
Yeah, I know. This is, and look, and this is what I mean. Why are people even buying all the toilet paper? What is the rationale behind that? There's huge thrusts of human psychology, which are driving behavioral characteristics that most people don't even understand what they're doing or why they're doing it or whatever. Funnily enough, I haven't stocked up on toilet paper, but someone recently told me, they were like, mate, have you been into the Woolworths there? There's nothing on the shelves. And I thought I better go in and have a little look. I got to see this for myself. And rightly so. No toilet paper, almost no canned goods, virtually no pasta. And I'm thinking, what's going on here? And I did stock up on a couple of rolls of kitchen towel just in case.
You need kitchen towel.
Well, you never know what you might need in this kind of environment.
So how does all this fit into property right now?
There are a lot of different forces that I see at the moment, and I think they've really pressurized very much so in the last, say, month, few weeks at least. So obviously the coronavirus has been impacting not only global economics, but also business sentiment, consumer sentiment, all that kind of stuff. And that excites a lot of change within the marketplace. You can see changes, obviously, look, in a space of a week, $240 billion got wiped off the ASX 200. So people are in that sector, and obviously shares and stocks and all that kind of stuff, it's business. Whether you want to think about it like business or not, you're investing in businesses, it's business trade. So when you see that much value being extracted out of the business sector, that instantly has an impact on the rest of the economic environment and also where people want to divest the wealth. So people want to move their wealth into residential real estate because it's a bit safer and a little bit more controlled in this kind of environment. Look, personally, is it the right time to sell these shares? I don't know. That's not the question. But we're also seeing what that's going to have an impact on stuff like commercial property and things like that, because as we've already seen over the past, say, 18 months with shopfront retail and all this kind of stuff starting to close down, which is expanding the opportunity for new commercial businesses to operate within that space. You're seeing reduced competition in that sector as well. So then you're also seeing a decrease in confidence in that sector. So people are even wanting to divest from commercial real estate into residential. So you've got that push. Then you've also got, first home buyer scheme, which is pushing a lot more people in the market, rate cuts, which you just mentioned just earlier, which is, everyone's starting to see the opportunity to potentially get something where they maybe couldn't. We see serviceability rates getting dropped. So people who maybe couldn't borrow now can. And we're seeing all these different forces pushing together to create one pressure cooker. But there is one overarching defining characteristic, which is going to cause this to be, I think, a more elongated process than, say, something that we're going to see affecting the market for 3 to 6 months. And that is simply the fundamentals of supply and demand. Building approval rates have been low for a very, very, very long time. Population growth is still extremely high, highest in the OECD. We're not seeing any change in that. So even if there weren't all of these forces pushing more people into the market and more activity, we would still be seeing a tightening. But what's happened, because we've had this kind of triple-pronged or quadruple-pronged attack, more and more people are there, and all of a sudden it's creating this environment on a broad scale in multiple markets, whereas normally you'd see this kind of thing in a single market, say in Sydney or in Melbourne, in pockets of activity over a space of a year. I think this is going to be much more broad scale and much more interesting. I personally believe we're at the start of a 4 to 5 year macro upswing.
So is it a good time to buy property?
Yep.
Where?
Oh, everywhere. No, it's like more than ever, I think that people need to be really careful, because in times like this, when you see increased buyer activity, it's so important to make sure you're getting the selection correct, because people can start to get excited and start to look for cheap properties or look for other alternatives without rooting themselves in, again, the fundamentals and the principles. So I think more than ever, it's important to keep a cool head and to leverage the right team and do all of that kind of stuff. Now, right now, you asked what I'm seeing in the market and how it's affecting the place, right? So right now, full disclosure, we have been buying pretty actively in Tasmania for the past 4 months. We've now pulled out of that market altogether because buyer activity in the last 3 weeks has ramped itself up. We no longer see it being a competitive buying market.
I thought it was done. I thought Tasmania was done 2 years ago.
No, you're thinking just Hobart, and that's very
true.
That's a very limited perspective to take on a whole state.
See, look at that, I've got blinkers on.
Yeah,
that's
exactly.
Probably not a good idea for a property investor,
No,
is it?
exactly. Blinkers, exactly. Yeah. So we've pulled out of that market altogether. There are other places, I can't go into too much detail because we're still actively investing, but there are places in the Adelaide market, Melbourne market, regional Victorian market, Sydney market, where we're seeing, extreme tightening. We're seeing properties that are getting rented out before it's even settled because there's tightened vacancy rates, extremely tightened vacancy rates. We're seeing, whereas we might be in competition with 1 or 2 other buyers to buy a property, we're now in competition with 10 or 15 in some cases. And even in some, I guess, more low-key investment areas, where we try and get in before the main bulk of the buyers, in some cases we've seen as many as 50 to 100 people going through open homes on weekends. So it's a significant increase in activity. But that doesn't mean don't buy in those markets. It just means that you need to take a much more holistic view to the investment process. Right? A lot of people get caught up on simple metrics, such as price, such as current yield, such as like these kind of very simple metrics, which one metric, like any piece of data in isolation, is never going to tell you a complete story about anything. You know, if I was to tell you that I weighed, 85 kilos, would that be fat or would that be light? It was going to depend on my height, and it's going to depend on all the whole range of other things, different metrics together. So it's this kind of an analytical view you need to take to a value investing perspective. Now, Warren Buffett is one of the greatest value investors in the world ever, and understanding the way he thinks about investing and applying that paradigm to property, I think is what's going to set people up for a very successful next couple of years.
So channel your inner Buffett. What would he be saying right now in this current market?
Well, he'd be saying buy the right type of stuff. He's actually been sitting on $130 billion worth of cash for the last few years, and he's just started spending it, because if you can identify what the true and future value is of an asset, no matter what class it's in, and also what the reasonable probability is of success, so the risk-reward ratio. If you ever think that you can mitigate risk to a 0 point, you're never going to get anywhere in anything. So then it really becomes down, okay, what is the risk tolerance ratio, and what is the probability of success? And also, what is the tolerance of complete failure? Because even if you were to say, okay, I've got a 60% chance of success, so more than likely chance of success, and that would be very good. But what happens if I'm 100% wrong? Is that a result that I could live with, or would it be catastrophic and cataclysmic to my life? Right? You've got to weigh those two things up and make a value-based decision on that, and about how you're prepared to push yourself into the market.
Goose, we're going to take another break, and there's a couple of things I want to chat to you about when we come back. You touched on it really quickly, this first-time buyer scheme, and how that's sort of exacerbating or contributing to the supply and demand situation we're in right now, and also finance. Back in a moment. Welcome back, everyone, here with Glenn Goose McGrath. We're chatting all things this market right now, trying to get a sense of it. And, you know, is this a normal market? Would you say this is just normal? It's a bit abnormal?
I would say it's abnormal. Now, I have never pretended to be anything that I'm not. I haven't been investing for 20 years. You know, I don't have that longevity and breadth of experience, but what I do have is a deeply inquisitive and analytical mind.
A challenger mindset. You're a renegade.
Absolutely. And look, from the best analysis that I can do, and I obviously leverage the experience and advice and information of other professionals too, because I'm not so short-sighted and arrogant to think that I know it all, I can work it out. So I rely on filling the room with people smarter than me too. And from everything we can see, this is a very abnormal market, but it's not one to be afraid of. So I think that people have really got two options right now, and only two. They can sit and wait for the market to cool down, and no one knows how long that's going to be. Or they can position themselves, their psychology, their mindset to robustly and powerfully make strong moves that are going to set them up for future and advance their personal wealth journey. And I think that people just need to decide where they fit within those two positions.
How do you work that out?
Well, I would suggest reading a copy of my book and understanding, getting to understand.
But to that point, you know, I think one of the better traits of me as a property investor is I'm quite reflective, right? I'm able to challenge myself, and I don't need a self-help motivation, an Anthony Robbins type event for me to start thinking that way. And I think I'm probably one of the lucky few rather than those that doesn't come naturally to. So how do you actually change your thinking so you can start being more self-aware and therefore start taking actions that you normally or typically wouldn't take? Because that's the only way that you might be able to break some of the shackles that give you blinkers in this current market.
If I'm really honest, I think that answer will take longer than we've got for this podcast episode, because it's not something that you can...
Is it years of therapy, is it, or something like that?
Well,
maybe.
Not to try and plug the book again, but there's about 3 chapters.
I was only going to give you 2 plugs, mate. You're already over it. So, but what are the chapters?
So there's 2, I think, or maybe even 3 chapters purely dedicated to that, because there's so many ways that you've got to pick it apart. You've got to understand what your vision is. I often talk to people about future pacing your vision. Now, if you can position yourself of where you want to be in 10 years' time, really go there emotionally, deeply, passionately, and try and understand what that looks like, feels like, smells like, what you're acting like, what you're wearing, where you're living, how you feel, all of that kind of stuff. That's going to give you a good benchmark of where you want to go. And if you can kind of start to join those 2 dots, and there are tactics and strategies to do that, then that's what's going to allow you to bridge that gap. Okay. And that's going to be different for everyone too. You know, not everyone wants to go out and be a super aggressive property investor. Some people just want to buy 1 or 2 and just chill out. And that's totally fine too. Yeah. And that's about really understanding your own journey.
First time buyer scheme. Tell us about it.
Well, it's certainly causing delays in finance, that's for sure. So, look, across the board, I think anyone who's been looking to invest or looking to get finance has probably seen a slowdown on approvals. Obviously, part of that was from the bushfires and lenders and stuff taking stock on LMIs of a range of different things. And now, obviously, we're seeing a lot more processing in the market. And in some cases, we're seeing lenders with 21 to 28-day wait times. So what it's done is really kind of slow down the process for a lot of people. So at the same time, there's more people trying to get into the market. So I think more than ever, it pays to be finance ready if you want to get into the market and make the most of it. And to do that, go speak to a broker, go speak to a professional, get some advice on how to do that and understand what your capacity is. Because with cheaper interest rates, with cheaper lending and all of that kind of stuff, there are more first home buyers who once thought themselves priced out of the market. Now, I'm a millennial. I'm 30, I think I'm turning 33 next week. So I'm a millennial, and lots of millennial mindset around property is they'll never be able to afford it. They'll never get into it. They're never going to succeed. It's all for boomers. It's all done and dusted. And now finally people are starting to see an opportunity where they can get into the market. Now, fantastic, wonderful, more opportunity for everyone. But again, that's driving more competition into the marketplace on a broad acre scale.
I found out the other week that I'm actually a Zennial. Have you heard about this?
No.
A Zennial. So a Zennial is, you're not an Xer and you're not a millennial, you're a Zennial, right? And the logic goes that you grew up in an analog world and your adulthood is in a digital world. And they said it's a really unique, grouping of people, probably between 6 and 8 years of, which is the very late 70s and the early 80s, right?
Yeah.
And I was like, I only found out about it the other day and I went, oh, that's cool. I looked into it. It's a really cool thing in terms of giving you how you see the world, right? You can sort of remember the old...
Like a renegade.
Yeah, it's like a renegade. You can see the old days. Maybe that's why I'm such a reasonable podcast host. But I can speak. But, this sort of grouping of people, I've got a particular sentiment, a particular way of seeing the world, the way I choose to approach different things and scenarios, with dichotomy of two different sort of views. But when you look at where we are right now and where you are in your property investment journey, some people are X's, they might be Generation Ys or Millennials, and now coming into, what's the next one?
Not sure.
I can't remember what they're called. Anyway, how do you not get caught up with the noise and the stupidity, and I put that in inverted commas, the stupidity of this current market? And for some that might be, too many people are buying properties when they shouldn't be. They're buying the wrong properties. They're buying at the wrong time. They're buying in the wrong place. This whole FOMO thing, which now I think it's turned into JOMO. How do you embrace the JOMO, the joy of missing out right now? Don't get involved. Don't get involved in the stupidity.
Yeah, that's a really tricky one because at the moment, what we are already seeing with, auction clearance rates and, the amount of people getting into the market and already starting to push, values up. I mean, we're seeing double-digit run rates already pretty much across the country.
It's crazy. So people are going, if I don't get in now, I'm never going to get in. Quick, I better hurry up and get my first home because I'm never going to get it again. It's all perception-based.
So I think two things. So one thing that I like to deploy in my life, and I suggest that everybody does it to some degree, is to employ an information diet, okay? Because there's nothing more damaging to the proactive pursuit of where you want to go in life than listening to too many things. It's really that simple. I was on the phone with someone yesterday and they were telling me they really want to invest. They've got the money to do it, but they've been trying to invest for 2 years. And they were on the phone and they literally told me about 15 different strategies. Oh, I'm thinking about doing this, but then what about doing that? And then doing this, blah, 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 blah. And I was like, you need to just slow down and stop listening to people. Like, you got to find one thing that is going to be rooted in your core principles and move you towards your destination. Many tactics and strategies will work. It's about finding the one that's going to resonate with you the most. And it's about really just going deep on that. Because in an environment where there's more noise than ever before, I mean, I've deleted Facebook off my phone and stuff like that because I tend to find the more information you have injecting yourself into your life, the more scrambled your viewpoints on anything will be. Smart Property Investment Show, just to give it a plug, is an amazing resource to rely on to keep your views aligned and to keep yourself aligned with the market. But you also don't want to be going out there just trying to fill yourself with too many different ideas. It's good to almost go to the tasting board, have a little taste of everything that's out there, and then decide what meal you want most, and then sit down and eat it. And it's that simple.
And therein lies the challenge and also the opportunity for property investors is working out what's right for you.
Absolutely.
That's the hard bit.
Yeah, absolutely. And I think there is no golden gun for that. There is no what is the right answer. There isn't. It is entirely what is right for you. And I always say, seek out some professional guidance and advice and find out what's going to resonate, and make sure that whatever strategy, tactic, tool, advice, guidance, partnership, or otherwise that you want to deploy in your life, just make sure that it feels right. Because I think a lot of people don't put enough credence and weight in intuition and belief. And I think it's got to feel right, and it's got to withstand robust scrutiny. You've got to be able to question it. And if it stands up, then you can go, okay, cool.
So just on that basis, your view of this particular point, should you always go all in on a particular strategy or tactic, or should you always just do a little bit to work out whether it's right for you and then do more of it? So do you keep your powder dry, or if you make an informed and educated decision, do you actually get in there and do it 100%?
So I've always lived my life in a very 100% or zero way, 1,000% or nothing. But I also have people that come to me who maybe are high net worth individuals or entrepreneur business owners who have a substantial amount of liquid cash and they want to invest. And they say, look, why don't we just go buy 5 properties right now? And it's amazing that they have the belief systems to want to do that. And I usually tell them to slow down. I usually say, let's do 1. Let's cut your teeth. Let's get you in. Let's make sure it feels good and make sure this process and ideology and everything, the outcomes are going to be suited to you. And then after that, after you've tested it and tasted it, then if we want to commit and we'll do another 5 or 6 or 7, let's go. Let's do that. But let's just do 1, settle down and finish that first. And I think that's an important way to do anything, because just imagine if you were to sink every dollar you had into Bitcoin, for example, like, going holus bolus into everything with no risk management strategy, I think is probably foolhardy. So you need to test it and understand. And the only way you're ever really going to know something is by taking action. You can analyze things to the nth degree. And in fact, overanalysis is what stops most people from taking proactive action and achieving success. So it's about managing that and understanding, okay, what is the level of risk to which I can commit? And what am I prepared to do? And again, what is the downside if it all goes bad, and will I survive, and will I still prosper anyway?
Back to the book, Limitless, A Renegade's Guide to Building Wealth Through Property. Who's the author of that? What's it say on the cover?
Goose McGrath.
It says Goose McGrath, does it?
It does.
Really?
Yeah.
It's not a sort of goose in inverted commas? Just
No.
Goose McGrath.
Correct.
Okay.
Yep.
So how do you get a copy of it?
So the way you get a copy of that, as I said at the moment, I think I said it at the start, it's not actually in Amazon or in bookstores just yet. We're doing a limited run of sort of free plus shipping to get the word out there. If you wanted to get a copy, you can go to renegadespropertybook.com and grab a copy there. We've got a few links on the Smart Property Investment Show website as well. But for a limited time only, we're just sort of trying to get the word out there and spread the message. And if you read the book, I'd love to hear from you as well.
Well, let's do that. So we'll put within the show notes of this particular show, we'll put a link through to that saying, check it out and go and grab it. And you got any questions at all? I think it'd be really good fun to do a bit of a Q&A on it. Whether you agree or disagree with Goose McGrath, it's largely irrelevant to me. You guys can have this conversation, but I'd be happy to host it. You would challenge some of the ideas and the philosophy and the way you see the world, whether people want to say, well, I don't see it that way, or they go, absolutely, this works for me. I think it'd be good to have that chat.
I would welcome that. Can we set up some kind of open forum where basically I can be lambasted and bombarded and harassed and harangued? And
can I be one of the harassers and harangers?
Yeah. So I'll
because that's where I work my best.
Yeah, and a microphone and the internet just shouting at me, and let's just see how it goes.
Give Goose a hardtime.com is what we'll call it. But
somebody's going to go and squat that domain now.
No, I think it'd be good, because robust, sensible, challenging of ideas as a property investor is how you get ahead.
Yeah, and I welcome it too. And I think, again, there are a lot of very intelligent and very successful property investors out there and property strategists out there, many of whom have been formative to my own principles and ideas and values to where I've gotten to. But that doesn't necessarily mean that the things that I've got to say are going to resonate with people, or they'll necessarily understand the depth and clarity to which I'm trying to explain things. So I always welcome a conversation around it, and I always welcome the idea that I can be challenged on different things as well. So.
Okay, good. And dashdot, how do people want to check you guys out? What do they do?
Oh, it's pretty simple. They can check us out on Facebook, so facebook.com/dashdot buyers agents, or go a little bit old school and go to the digital shop front, www.dashdot.com.au.
There we go. Thanks for coming in, mate. I always enjoy it.
My absolute unadulterated pleasure.
Good one. Remember to check out smartpropertyinvestment.com.au, social media, Facebook, Twitter, LinkedIn, Instagram. We're there all over the joint, Smart Property HQ, or just look for Smart Property Investment. You can track us down. And also, if you're doing anything, tag us on Smart Property Investment on Instagram, and we can repost that stuff as well. It'll be good to see a lot more property investors doing their stuff. smartpropertyinvestment.com.au. You can subscribe there as well. Quick favor also, if you like what we're doing with this podcast, the guys and the girls here, the whole Smart Property Investment team, get a real kick out of the reviews coming through. So please keep them coming. It does mean a lot to us that we're really connected into knowing that what we're doing is helping you become a more informed and better property investor. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.